The United States just faced a financial shockwave of historic proportions. In a move that has left economists and investors stunned, China has retaliated fiercely after President Donald Trump imposed a staggering 125% tariff on Chinese imports. The fallout has been immediate and devastating, sending the US market into a tailspin, wiping out an estimated $500 billion in value almost overnight. While Trump had initially suspended global tariffs for 90 days to provide temporary relief to the stock market, this sudden escalation in the trade war with China has erased any positive momentum. Wall Street is in chaos, businesses are scrambling for contingency plans, and the global economic order is shifting right before our eyes. With such drastic consequences unfolding, the big question remains, was this move a strategic masterstroke or a catastrophic miscalculation? And how will this seismic shift impact the average American? Before we dive deep, make sure to subscribe to the African Web for more in-depth analysis of global events shaping the future. But China was not caught off guard. China saw this coming. For months, Beijing had been preparing for the possibility of aggressive US tariffs, taking proactive steps to reduce its economic dependence on American exports. One of the most significant moves came in the energy sector, where China dramatically slashed its reliance on US liquefied natural gas (LNG) imports. Once a major buyer, China has cut its imports from merely 20% to just 5.4%, effectively sidelining American LNG producers. Instead, China has cemented long-term energy agreements with alternative partners such as Qatar, Russia, and Central Asian nations, ensuring a steady and diversified supply. A major investment in the East Asia gas pipeline, set to be operational by 2027, further strengthens China's energy independence. Even more alarming for Washington, Australia has now overtaken the US as China's primary LNG supplier, a development that has blindsided American energy companies. This strategic pivot showcases China's ability to undermine US economic leverage, exposing the fragility of America's energy dominance. Beyond LNG, China is also ramping up its domestic energy production, increasing investments in renewable sources such as solar and wind to decrease reliance on foreign fuel. Beijing is also aggressively acquiring stakes in oil fields across Africa and the Middle East, ensuring control over crucial energy supplies. This shift signals a broader strategy where China not only retaliates against US policies, but also builds long-term resilience against future trade wars. The US is already feeling the heat from China's counterstrike. Before China halted imports, the US exported around 400,000 tons of LNG annually, generating over $2.4 billion in revenue. But now, American LNG terminals are sitting on unsold stockpiles, facing skyrocketing shipping costs and plummeting demand. This sudden shift has created an economic domino effect, sending shockwaves through Wall Street. The Dow Jones has plunged by over 1,200 points, while the S&P 500 and Nasdaq are suffering historic declines. Investors are in full panic mode, as JP Morgan has raised the probability of a US recession to 60%, citing escalating trade tensions and policy uncertainty. Meanwhile, American businesses are caught in the crossfire, with industries ranging from manufacturing to retail absorbing the brunt of rising costs. Consumer prices are set to soar, squeezing households already struggling with inflation. The economic storm is just beginning, and the outlook is increasingly bleak. The housing market is also experiencing ripple effects, with mortgage rates spiking due to investor uncertainty. Small businesses, which are heavily dependent on imported raw materials, are witnessing reduced profit margins, leading to layoffs and closures. With credit markets tightening, borrowing costs are rising, further straining both businesses and consumers. The global response to Trump's tariff war has been nothing short of chaotic. Over 75 countries are now rushing to secure exemptions, fearing devastating ripple effects on their economies. Yet, while Canada and Mexico have successfully negotiated tariff reductions, China remains excluded, a deliberate move by the Trump administration that has only intensified Beijing's resolve. In response, China has doubled down on strengthening its trade alliances with key global players. The European Union, Japan, and Canada have openly criticized Trump's erratic tax policies, warning of long-term consequences for global markets. Many of America's traditional allies are now pivoting toward China, seeking stability in a world increasingly defined by Washington's unpredictability. As US diplomatic credibility continues to erode, China's influence on the global trade stage is only growing stronger. At the same time, global supply chains are being restructured as companies look for alternative markets. The World Trade Organization is struggling to mediate disputes, with nations threatening retaliatory tariffs of their own. This unprecedented shift in economic alliances is reshaping global power dynamics, with China positioning itself as the more reliable economic partner. Domestically, the backlash has been fierce. Farmers, already battered by previous trade disputes, are facing a fresh crisis as exports plummet and costs soar. Small businesses, struggling to absorb the impact of rising tariffs, are closing their doors at an alarming rate. The American job market is feeling the squeeze, with unemployment numbers on the rise. Even Trump's once loyal media allies are turning on him. Fox News, which has historically defended his policies, is now questioning the wisdom of his economic strategy. Late-night hosts like Bill Maher and Robert De Niro have relentlessly mocked Trump's handling of the crisis, painting a picture of economic incompetence. The public is growing increasingly restless, with approval ratings for Trump's trade policies nosediving. As frustration mounts, the political landscape for Trump's administration is becoming increasingly volatile. The long-term damage of this trade war is already becoming evident. Despite Trump's promise to bring manufacturing back to American soil, companies are doing the exact opposite. Many businesses are shifting production overseas to avoid costly tariffs, leading to factory closures and job losses in the US. Tariffs on Chinese imports are driving up consumer prices, making everyday essentials more expensive for American families. Inflation is creeping higher, with economists warning of prolonged economic stagnation. Trump's aggressive trade policies, intended to strengthen the US economy, are instead accelerating its decline. The reality is becoming clear. This trade war is not a show of strength, but a self-inflicted wound that could take years to heal. Many economists predict a long-term decline in US export competitiveness as global markets realign. China, meanwhile, is emerging stronger, having diversified its economic partnerships. If these trends continue, the US could face a diminished role in the global economy for decades to come. Trump's 125% tariffs were meant to put China on the back foot, but the strategy has backfired spectacularly. Instead of bending under pressure, China has executed a well-calculated response that is reshaping global trade dynamics. The US economy is now more isolated than ever, facing increasing market uncertainty, skyrocketing costs, and a growing loss of international trust. With $500 billion already wiped from the market, the stakes have never been higher. Will Trump double down on his hardline trade policies, or will he be forced to reconsider his approach as the economic toll worsens? The world is watching, and the next moves could determine the financial stability of the United States for years to come. What do you think? Has Trump's strategy strengthened or weakened America's position in global trade? Let us know in the comments, and make sure to subscribe to the African Web for the latest insights into global economic shifts and power plays.